Hello everyone, welcome to Progress FS. In this video, I will be teaching you a very good strategy that works so well. Before then, subscribe to my YouTube channel and turn off the notification button because I'll be dropping more good strategies that are very important and working as well. A lot of people have been asking me how to set these moving averages. Before continuing to, in the video or the reviewing the strategy, I would want us to delete these moving averages and apply it again. Let's take off the three of them. So you see the chart. Let's apply it again. The first moving average you will apply is 10 moving average properly. As you can see, you set the method to exponential, and apply to close. Then you go back again, select moving averages. In this place you add 20. You leave the method to exponential and apply to close. Then the color to purple. You can use any color of your choice, but that's my color, the color of my choice. And you go back to F key, you apply chart and the main chart, then select moving averages. This time around you change the period to 34. Change the period to 34, then method to simple, and leave it to apply close. Then you change the color to the color of your choice. Then this is how it looks. So here, what you do in this strategy is I call it a pending order strategy. So like I told you before, it's very unique. Your aim is to trade the trend and not to trade against the trend. I repeat, your aim is to trade the trend and not to trade against the trend. So you can use 4 hours chart, but using 4 hours chart, it will take long for it to mature. So your aim should be to use a 1 hour time frame if you are a day trader. Except if you are not a day trader, you're a long time trader, you can use a 4 hours chart. Then if you are using 4 hours chart, you should use the daily chart to moderate it. So using 1 hour chart, on daily basis, like I told you, this line represents where the market closed for the previous day, open the new day, close for the previous day, and open the new day. So you can set it through your settings, for the line to appear like this, and of course change the background of your screen to my own color so that you can be able to see, the background of your phone or either system can be able to see these lines, so that it will enable you to know what you are doing on daily basis. So the first candlestick that will come out in 4 hours chart, or every candlestick that comes out in 4 hours chart, it used to have a minimum of 4 hours candlesticks. So in that candlesticks, what you need to do is, when the market open on daily basis, you allow that 4 hours candlesticks to develop. So when it develops, as you can see in this place, this is the first candlestick, this is the second candlestick, this is the third, and this is the fourth. So what we do here is, okay, let's go back to maybe and start somewhere that a trend have occurred, so that it will enable us to understand what I'm about to review here. So what we do, you go and select a horizontal line and apply it where the market closed the previous day. Let me widen this. You saw what I did, you can as well do so that the line will be obvious. So whenever the market close for the previous day. And of course, whenever it is forming a trend, you are to wait until it finishes forming the trend. If you don't find an option to trade at this particular currency pair, you go to another currency pair and look for where there is a trend in 1 hour chart. So you put this line where the market closed for the previous day. That's or where the market crossed initially and closed for the previous day. Look at where it closed for the previous day. Sorry, is this place. So what you will do is you put this line here and wait for the 4 hours candlestick to develop. So look at the first candlestick, second candlestick, the third candlestick, and fourth candlestick. If it did not cross below if the candlestick did not close below this line, then you set your pending order 30 pips below the line. Set your TP wherever this black with 34 moving average is at the moment where you are trying to set that is immediately after the 4 hours candlesticks developed. So you set your stop loss wherever you find this black moving average. At any point it is at that moment is where you put your stop loss, or few pips above it. Then you relax and wait for the market. So in as much as it is a trend, definitely the market will pull down and open your pending order. How to open a pending order is you plus here, go to instant execution and select a sell stop or buy in the case of downtrend, or buy stop in the case of uptrend. So you open it like that and wait patiently, and of course set your TP in a reasonable place. Even if you are not around and it opened, it can be able to hit. So let's go back again. Look at where the market closed for the previous day. Again, for instance, what I had earlier wanted to show in this place, the trend crossed here. Look at the first candlestick, second candlestick, third candlestick, and fourth candlestick. So even if you are to take the risk of trading at this particular ranged area, what we do is allow the fifth candlestick to close. Wherever it closed, the moving averages crossed initially. Allow the fifth candlestick and make your decision after the fifth candlestick. Is very, very necessary and important. As you can see, for instance, the market crossed here. Look at the first candlestick for the day. Look at the second one. Look at the third one. Look at the fifth one. So sometimes the fifth one may not go above. Then you set your buy order somewhere here. So once it opens, it flies up, and of course make sure you set your TP in a reasonable place where it can be able to hit and not take you back to regret your decision. So, but in the case where the market did not cross, in the previous day, and you made the decision, you are not supposed to set your TP at the black moving average, that is 34 moving average, or just like you see in this place. You have to set it where the lowest low or highest high of the day is. So it's a very dangerous decision to make. So, but whichever way, you use proper risk management. But let's go to a new another place where there is where there is a market trend. You look at here now. The first candlestick is here. The second candlestick for the day, the third candlestick for the day, and the fourth candlestick for the day. So your decision here now is to set this line. That is, all these things will happen within the first 4 hours candlestick that will come out in every 4 hours chart every day. And that should be from 12 o'clock a.m. Then when the candlestick appears, you count 1, 2, 3, 4 of the 4 hours. Wait for it to finish developing. You don't join the market then. You wait keenly for it to finish developing. Then you bring this line down to wherever currency pair you are trading. You can use the same strategy to wherever the 4 hours this thing closed, candlestick closed, the fourth candlestick closed. You put it there, and then you go to this cursor and check either the 30 or 50 pips down. That is where your decision should be made. Don't be afraid what is developing then, because before then you cannot be seeing all these candlesticks. Obviously, you can't be seeing them, so you'll be feeling what will happen next. But in as much as it's a trend, you cross your mind and count 30 pips down or 50 pips down and set your pending order, a stop loss, a sell stop order or buy stop in the case of all trend. So once you set it, sometimes the market can even range, when the market is going sideways, it can even range throughout the day without opening your order. So, or even open your order and go back and start developing in between the lines, your stop loss and the lines. At the end of the day, to pull back with full force and go into profit. So here, once you set it, you go back, because in this case the market have not crossed for the previous day. So you are starting the trend. What you need to do is go to the highest of the previous day and set your stop loss. It is a decision you must make. So, but if you are setting somewhere below that, it's an option. But myself, this is a decision that is best to make. So even if the market is returning back, you know that once it breaks the highest of the day, it's continuing an uptrend. So that's by the way. You set your stop loss and take profit in any reasonable place. So your decision to set a TP should be buttressed by the movement of the trend, how sharp the trend is looking. Because how sharp the trend is looking in 4 hours chart, for instance, the speed of the candlestick or the length of the candlestick will determine the movement of the candlesticks in 1 hour chart. So you set your TP at a reasonable place and do not be greedy or envy yourself. Why did you not move it too long? Imagine if you just set it at a close place and then removed, and the candles, the TP has hit, then you'll be tempted to make another entry. There is always a chance in Forex market, and tomorrow another option will still come out, which you can still trade. So what used to kill us most of the times is wrong entry. When you make a wrong entry, the market will make a wrong decision against you too. So in this case, look at this place. Imagine the flowing day. Look at the way the market closed. So the flowing day, as you can see here, I'm just saying, for instance, obvious close made here, indicating that a continuation of downtrend is still going to occur. So, but whichever way, imagine that you made a decision here, and you counted the first chart, first candlestick, second candlestick, third candlestick, and fourth candlestick, and placed a sell stop order below, as in 30 pips or 50 pips below, and this candlestick came and removed it, then pulled back. You see why a loss is also accepted in the market? So whichever way, you accept your loss and move on. But I'm just saying, in case you make such decision, there is possibility for the loss to occur if your stop loss is not high or if you don't use proper risk management. So, but in this case where the market crossed here in this trend, now you made this is the first candlestick, this is the second one, this is the third one, and this is the fourth one, and you placed this line, you place this line here and do the same thing. Set your TP at a proper area, reasonable place, set your stop loss just like you are told, and boom, definitely your TP will hit. In the following day, you see what displayed here. Look at here, look at the first candlestick, look at the second candlestick, look at the third candlestick, look at the fourth candlestick, and you place this line here, just to examine, to note where the market is for the level of where the price went for the following day, and of course make your entry. Your stop loss, place your sell stop order, and of course stop loss somewhere as you are told. Boom, definitely it's gonna be just like that. Check all the time frames. As you can see in this place, the possibility of the market to close this coming week is there, but whichever way, you are to wait for the market to close. You have it and you see it obviously that it will closed before you make such and of course this will happen within the 4 hours candlestick development. Candlestick that is going to develop at this point. So whenever the market opens, then you make your decision. So that is how it goes. Subscribe to my YouTube channel. I will drop more useful trading strategy. And trust me, if you do this, you must do this consistently. You can't just do it once and say, oh, because I did not get it right, it won't work again. No, you must use proper risk management. 1% properly, 1% in every entry. There's no how you can make the entry in different times and tell me that all of them will fail. It doesn't fail like that. It used to fail sometimes, not always. Maybe, and that's why Forex is not 100%. Maybe out of 10 entries, 1 or 2 may fail. That is as a result of the fact that you did not identify the trend very well before making the decision. So that is why you must identify the trend using these multiple moving averages before making the decision. So subscribe to my YouTube channel and see you in the next video. And next video we will review how to scalp using 4 hours candlestick. It's very, 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 very motivating anyway. See you in the next video.